9 a.m. in Greater China, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets here in Hong Kong. Mainland markets are shut today. Our top stories, Asian stocks rising as oil prices stabilizing, with President Trump saying that the military will guide stranded ships through the Strait of Hormuz.
Meanwhile, China tells its refiners to ignore U.S. sanctions linked to Iranian oil, and that's adding to tensions ahead of this month's summit between President Trump and Xi Jinping.
And I'm Min Min Lo at the Wan Chai District Court in Hong Kong, where a closely watched trial is set to begin. Block trade king Simon Sadler and his former hedge fund Sergantii Capital denying charges of insider dealing.
All right, of course, we kick off the week here with oil prices once again front and center. It seems like we started the day or the week with oil prices a little bit lower, but now we're coming back that here. Just there's still a lot of uncertainty of what the U.S. has said about really escorting ships through the Strait of Hormuz and what that's really going to look like.
Yeah, it feels like we're on. It's encouraging, and it's certainly much better position than we were going into the weekend. But it's really simply at the margin, we're getting a lot more of the positive news flowing through as well. And I think the oil price tells you, the fact that we're still above 105 tells you that, these are still fairly extreme levels. But yes, this is something that we'll continue to track. It's certainly a specifically new development in as far as what types of vessels and ships could be able to pass through. And we're coming out of a stellar month, really, for equity markets. And I think with U.S. stocks in a 5-week rally, and the AI play has certainly put the war behind it quite obviously at this point. Yeah, and it really is this whole AI boom that continues to offset and overshadow what you're seeing, which is this energy shock across the region, right? And, take a look at what we saw with GDP numbers coming out of Taiwan last week. We were talking about north of 13%. There is reason why this equity market continues to charge higher. There you go. We're up close to 3% at the early get-go here right now, Dave. Yeah, 40,000 on the TAIEX index, 14%, as Yvonne was mentioning there. The fastest growth clip since 1987. That's a bit. By the way, speaking of 1987, I was going to say Michael Jackson, of course, back in the 80s. It's the last time Taiwan actually had a growth clip of that one. Just speaking of course, what was in the cinemas on the weekend. We can talk about the cinemas in a moment there. Also, in case you missed it, we thought it was coming soon, but it came quite quickly. Yentervention. Of course, going into the weekend, and hence why we're getting a lot of these key crosses on the yen. 157, we took on the 50-day moving average. We bounced up the 100-day on offshore China yen. But yes, looking at the numbers we were able to parse, it does seem that they were really actively in the market. First time since 2024. Yep, despite the fact that the finance minister mentioned, she can't comment on it as well. So certainly read between the lines, read the fine print, it seems. But yes, keep in mind, though, the yen is trading. But when you talk about Japan, China, Thailand, those markets are closed, whether it's May Day, Labor Day, or the Golden Week holiday there. Yeah, absolutely. And just going into the Hong Kong session today, of course, when mainland markets are shut, you don't have the Stock Connect, which removes quite a big factor of potency. Looking at markets today. But all that is to say, equity markets are on better footing than we were last week, at least in some parts of the market here. And a lot of this is down maybe to news flow over the weekend. Yeah, let's get to the latest now. President Trump says the U.S. will begin guiding some neutral ships trapped in the Persian Gulf out through the Strait of Hormuz starting Monday. For more, let's bring in our Bloomberg editor, Michael Heath. He joins us now. And Michael, just walk us through how this is all going to be enforced and how it's going to play out.
Yeah, hi, Yvonne. Yeah, it's sort of not completely clear at this stage, as is often the case. But President Trump has basically said that neutral ships that have no involvement in the conflict, that have been stuck in the Persian Gulf, the US would begin guiding them out of that area because some are running out of fuel food and these sorts of things, and it's sort of just to move them on. The US Central Command said that it would be providing sort of a coordination effort, which is drones and air support. There's apparently going to be guided missile destroyers there too. But then the Wall Street Journal was reporting that there'll be no naval escorts, which is sort of the the big issue, particularly because the Wall Street Journal is also reporting that Iran's believed to have put naval mines in the area. So whether it actually leads to anything is really quite unclear at the moment. There's also been reports that Iran said that, or an Iranian official is cited as saying that the US can't do this, and the Strait of Hormuz, that would affect the ceasefire and these sorts of things. So it's very, very unclear. Oil initially dropped and then sort of bounced back as people were trying to work out how exactly this might work and whether it can actually happen.
Does this help push forward any progress on the broader peace front, Michael?
Yeah, David, I mean, there's been a bit of toing and froing there. Iran had put forward a 14-point plan to the US. Axios was reporting that the idea was that the Strait of Hormuz would be opened, the US would lift its blockade, and then and Iran and Lebanon would have a guarantee that there'd be no more airstrikes. There was no mention of the nuclear deal because that was apparently, once this happens, there's sort of a 30-day deadline for this to happen, and then after that there would be a month's discussions on the nuclear issue. If you put it sort of into its logical trajectory, what that would mean would be Israel and the US ruling out any more airstrikes and then having to have the nuclear negotiations after that. So if we got into this war, if the US got into this war in order to try and fix the nuclear issue, it sort of rules that out. So fairly, as expected, President Trump is sort of pushing back on that. But the US has responded. Iran said it's looking at the US proposal. So again, a bit of toing and froing there, but there is talking going on.
Michael, thank you. Michael, talking, I think, is a good starting point, although it's really not clear where the tangible progress is at this point in time. Now, on a separate but related issue to this story, China has ordered its companies not to comply with U.S. sanctions on 5 domestic refiners linked to the Iranian oil trade. Now, Beijing is deploying this rare blocking measure aimed at protecting its firms from foreign laws it deems unjustified. The Commerce Ministry says that the U.S. measures unlawfully restrict normal trade with third countries and also breach international norms. And, of course, we're looking at, I think, refiners as one cohort in equity markets today.
Yeah, so certainly that's one thing to watch. And then there's this, right? You take a look at a chart like that, and it seems like when it comes to the regional benchmark, they're really kind of shrugging away the latest headlines when it comes to Iran, because you continue to see this market. We're just less than 1% away from reaching another record here for the MXAP. So certainly Taiwan is helping that here this morning, Korea as well. We'll see if we get through to that sort of milestone.
Yeah, up to 3% in the early going today. Where we're not getting the support there is really from the usual Chinese platform names, and we'll really see what Macquarie makes of that story, really how we play the China equity strategy. In fact, it's coming up there, coming up in a couple of minutes here. Macquarie Capital's head of China equity strategy, Eugene Hsiao, will be joining us for the outlook, in terms of the outlook for stocks amid the energy shock.
And we're counting down the open of trade right here in Hong Kong. Mainland markets are still shut here today. This is the China Show. You're looking at live pictures now in Canberra, welcome ceremony at the Parliament House, where Japan's Prime Minister Takaichi is visiting there, of course, in a pretty interesting meeting with the Prime Minister Albanese there. But the focus is going to really be on defense, critical minerals, broader economic security, and with the two countries concerned, of course, of the ever-changing geopolitics in the region. So certainly coming at a time, too, of this Iran war, and also if there's ways that they can actually reduce the reliance on China as well. That remains a theme.
Yeah, the war is really a reminder of that, right?
Yeah.
A lot of the supply chain proofing that's going on across these economies and trade routes, what have you. In fact, that's really one of the themes that remains the case when you look at Chinese equity strategy, right? Things like self-sufficiency, AI, reflation, things we will get into in a moment with Eugene Hsiao out of Macquarie. To talk us through the equity strategy there. And, the AI story, which we'll get to as well in a moment, does seem interesting because it's really showed up in a very different way in equity markets in China than a lot of people were expecting a few months ago. In fact, when you look at how, I think, well, for one, the Kospi has done exceptionally well year to date. So has the Nikkei. Taiwan is not in here. So Asia is actually very close, as we were pointing out, to a record within 1%. But, we've lagged as far as MSCI China is concerned. And it's really showed up in the form of a world-beating Chinex index rally, where you have the CATLs of the world and the other sort of new AI faces in the China AI story. And as you can see, this is really where the Chinex has really stood out as far as this specific move is concerned.
Yeah, Bloomberg Intelligence's Marvin Chen has been writing about this as well this morning, and they're talking about the Chinex really, is the China NASDAQ is now approaching that bubble territory of its 2015 peak. But that does not signal another margin fuel crash, he says, given the fact that valuations are healthier, there's a strong earnings outlook, and there's a bigger concentration of some of these hard tech companies as well. Meanwhile, you got DeepSeek's launch of its V4 model, which reflects the success of China's efforts to achieve self-reliance across AI chips, infrastructure, and energy, and lends further support, of course, for the Chinex and Starboard. Joining us now, of course, is Eugene Hsiao, head of China equity strategy at Macquarie Capital. And Eugene, what do you make of this sort of divergence that we're seeing? It's not really the usual suspects that are really in the tech space that are leading the charge in this equity rally in China right now. How sustainable is that?
Yeah, that's a great point. I think right now, one of the issues that a lot of investors are dealing with when it comes to investing in AI in China is it's not really the same mix of companies that you're getting in developed markets. I think everyone knows a lot of or even EMs for that matter, in terms of Korea and Taiwan. But people really wanted to play that upstream infrastructure cycle in the chip side, on the power side. And those are the names that really stood out to me. China does have some of those companies, but they end up being a bit smaller, and that's why some of these names on the Starboard and the Chinex have really outperformed. But if you think of the broader platforms like the Babas, the Tencent of the worlds, I would argue they're not really pure play AI names, right? There's so many other business they're involved in, messaging, e-commerce, et cetera, that it's harder for investors to treat these companies as a real AI sort of play that they want to have a strong conviction buy on.
Yeah, so Eugene, I guess just to close the loop on that one, at least for now, should markets give up the idea that a benchmark like the Hang Seng Tech Index, for example, is the way to play the AI story in China currently?
Yeah, that's a great point. I think index construction is one of the tricky things about how people view China, and this is just the nature of how people are looking at the market. So the HS Tech predominantly is some of these internet platforms, the bigger ones, as well as names in the EV space, et cetera. It's not really a lot of these newer companies like the Minimaxes, like the Zipus of the world quite yet. So when you're looking at that as your proxy, it doesn't really reflect some of the more exciting trades in AI right now.
Right. Now, since you mentioned those two names, Minimax, Zhipu, what do you make of earnings so far, and what do you make of valuations in that specific corner of the market?
I think for us right now, our concern is really, the valuation at this point could be kind of any number you want it to be. Just really depends on how bullish you are on AI. But really, it comes down to liquidity, right? In the sense that if people expect market liquidity to continue to be strong over the next 6 to 9 months, then these valuations arguably are justified. I think the earnings, of course, has to be a longer term story for these companies as they grow from a relatively small base and really start to expand their user base and really their monetization down the road.
So what do you think is still the best play within China AI? I mean, it's rotated a lot, right? Before it was the AI design chips, companies. It was the assembly. Now it's more about optical modules and, the power grids and the ESSs of the world. I mean, what's the best way to position now?
Yeah, I feel like when it comes to China, especially the A-share AI names, the rotation is exceptionally fast. Essentially, some of the names you just mentioned there, Yvonne. Earlier last year, I think after the first DeepSeek bubble, people were really looking into the fabless chip space, names like Canberra, and then they moved into optical modules with names like Innolight, and they just keep on going into a lot of these stories and rotating in and out. However, our perspective is a little bit more structural. We're really looking for things that have the self-sufficiency angle. And you mentioned things like batteries, and to a certain extent, chips. And what we like a lot is actually chip equipment, because these are areas that are structural bottlenecks for China that the government support will always be there. I mean, when it comes to the internet and online services, I think just given the history, we've seen so many times that the government has been willing to step in and really start cracking down on some of these industries that it's harder for us to be completely kind of aware that these companies will be kind of not being touched by the government. But things like semiconductors, I feel like will always have this push that will allow them to continue to grow.
Eugene, just on that, self-sufficiency theme that you mentioned, one of the updates that you guys did, and I'm going to read it out just for our viewers here, a comment as detailed as you can. So you guys removed Baidu, Omnivision, Samsonite, and replaced that with Baba, GDS, and QSL as part of this refocus on self-sufficiency theme. Just tell us why.
Yeah, that really goes back to the upstream side of the picture, where we feel like one of the places that China is really trying to develop is building out the AI upstream side, which really comes down to the data centers, the equipment, and QSL is on the lithium energy side. And I think those are areas, again, the policy support is likely to remain very strong. On the more downstream side, and we did include Baba, but I would actually argue Baba people look at more, to a certain extent, as an infrastructure play these days rather than as an e-commerce play. But from that perspective, we do think that that's probably where the focus is going to be on, whereas the downstream plays, like let's say at Baidu, is a little bit harder these days because it's very difficult, I think, at this moment for investors to really pick and choose who the actual winner is going to be on downstream AI. The leading models change, it feels like, every week. So from that perspective, we think the upstream side actually seems to be a much better place to generate returns.
Beyond just the AI theme, I'm just wondering, what are some sort of other catalysts on the horizon there to really kind of wake up this market, you think?
Yeah, so one thing, of course, that's coming up is this meeting between Xi and Trump that should be happening in a couple of weeks. It's early days. I think that there's going to be a degree of rhetoric that's going to start coming up over the next couple of weeks around this. It's similar to what happened last year, where I believe that both sides will probably seem a little bit more escalatory, I think, in the next couple weeks as they try to put together some leverage going into the actual negotiation. But my take here is that it will be a relatively kind of trade truce scenario, more like an extend and pretend, because there's really no really desire from both sides to escalate this situation right now. I think there's too many other things, obviously the Iran situation, but even domestic politics for the US, like the midterm elections and all the domestic issues that China's dealing with, that having to deal with another trade agreement on the side of that at this exact moment seems like something that neither side really wants to have to spend too much effort on, which is why we think that it ends up being a bit of a kind of a trade truce, kind of extending what we saw last year. And markets will probably see that positively in the sense that there won't be a major negative shock.
I mean, plausibly, they could offer each other some positives here. And I wonder, it's probably something that you will be asked this week as you're there in New York. Are there any specific sector opportunities that this upcoming meeting between the two presents?
At this moment, the way we think about it in terms of probability is actually it skews slightly positive for China in the sense that we understand where the U.S. position's at. I think U.S. Scott Bessent has been very clear that they're trying to get the Section 301 tariffs back online, trying to use that as another negotiating tool. I think that's very clear. I think the U.S. side actually, you kind of know what their playbook is likely going to be. And on the China side, it looks like they're just willing to trade off buying some more of the U.S. exports, be that commercial aerospace, be that LNG, be that soy. All these type of things will probably continue to be traded off, you could say, between the two sides. Well, on the kind of the slightly marginal positive side, the one thing which I think could be a potential surprise is that perhaps U.S. would be more accommodating, I would say, for China to have more investments in the U.S. I think this is something that Trump has said in the past, where he wants China to invest in the U.S., that create jobs, to create factories, and he's okay with that, despite the fact that a lot of his party members and even the Democrats aren't really keen about that idea.
Right, Eugene, we'll have more with you, of course, in a couple of minutes here. Thank you, by the way, in advance for sticking around. Eugene Hsiao there in New York, of course, as head of China equity strategy at Macquarie Capital. Right, going into the Hong Kong Open today, again, public service reminder that mainland markets are shut this Monday. The approach is one that is rather sideways this Monday. Lots more ahead. This is Bloomberg. All right, if you were in Hong Kong this weekend, you might be in this picture. Pictures, of course, in the past weekend, different parts of Hong Kong, a ton of visitors. Of course, a lot of it a lot of the visitors coming through, of course, across the border, given that it is, of course, a long weekend there as well. And yes, a lot of the usual tourist spots from the harbor to several places up the mountains along the coast. Sai Kung.
There were taxis all around there over the weekend, even where David neighborhood, right?
Yeah,
always
it's
an attraction for the tourists.
I could barely see I miss seeing sidewalks at this point in time. It's just knees.
But I mean,
a lot of knees.
It's certainly a welcome scene, right, for Hong Kong,
Yeah.
which, we really haven't seen scenes like this for some time. And even Paul Tran, the financial secretary, wrote about it over the weekend in his blog post about just, he talked about the first 2 days. They saw about 600,000 tourists in Hong Kong. And really, that's really contributing to the growth numbers as well. We do have first quarter GDP coming out tomorrow. And he says, look, they're expecting numbers that are, at 5-year highs for growth.
Yes. And, gone were the days, it was quite quick how the narrative actually changed in that, right? Because when you had a long weekend, like 2 years ago, everyone talked about how people were just going north.
Yeah.
To China, and then you just have this disappearance of like would-be purchasers of overpriced French food in Hong Kong. But then you now certainly have still no buyers of overpriced French food, but it's a lot more pictures and cost. But yes, I mean, it's gone both ways, and certainly the tourist traffic has really showed you that change.
Yeah. So, I mean, they're off till Tuesday, right? China.
Yes.
So, I think we expect plenty more.
Yeah. In fact, you know what? We were just looking at this chart earlier on, you and me, right? If our producers can bring that up, 105.17. So the pace of total arrivals have actually picked up. So that's the blue line. 70, let's call it 80% since the start of 2023. But 97% growth is for same-day arrivals.
Yeah.
So in other words, people are yes, they're coming, but there's a larger and larger cohorts of visitor arrivals that are not staying as long, right? And it's just, your quick, high-frequency sort of travelers, and then you're back across the border.
And it's interesting because you look at, indicators, right? Whether it's that or you look at even, casino operators and what we saw in the game revenue in April.
Yeah.
Yes, you saw growth of 5%, but you're still talking about numbers that are still far short of what COVID levels are.
What used to be.
What it used to be. But certainly things are improving. But yes, even when it came to Macau, it wasn't as good as expected for last month as well. They said really it was the VIP segment that's where you're starting to see things slow down and really offset some of the gains that you're seeing in mass market, premium, that segment as well. But certainly, yeah, they're not spending as much, which is what you're seeing in Hong Kong, too, in some ways, among some of the mainland tourists, too.
Yeah, it's very different, right? Very different spending patterns. So the data, I think, came out on Friday as far as Macau casinos goes. Early goings, casinos on your screens. Just very quickly, well, in terms of data, some card numbers also came through as well for the month. And this is really up in the early goings, seems to be where we are getting the outperformers in this market. We have lots more ahead, including the open. This is Bloomberg. Good Monday morning. Welcome back to watching the China Show. Mainland markets are shut today, so no stock connect. That's a big chunk of volume and turnover that I think we can wait before that market reopens, of course, to have that story. But suffice to say, there are other drivers of this market today. Autos were a big mover in the pre-markets, 1.4% to the upside in the Hang Seng Index. And in case you missed the previous segments, the Financial Secretary Paul Chan in the blog post on Sunday said Hong Kong is set for the fastest growth clip on a quarter basis, of course, in 5 years. Comes out, I believe, tomorrow.
Yeah, and it just goes to show, right? Even before this Iran situation, I think markets and economies were doing very well.
Yeah.
And I think we're showing the resilience here in Asia. We certainly saw that with the Taiwan GDP numbers last week when you're talking about 13, 14%. I think Korea exports are showing similar sort of trajectories here. So that sort of AI investment boom continues to overshadow the energy shock that we're seeing in Asia Pacific. But here's your open in Hong Kong. Of course, this is the loan market that's opening up in Greater China here today. And we're coming back from that May Day holiday there. There you go, Labor Day, I should say. We're up about close to 2% for Asia's tech, as well as the Hang Seng. So at least today, Asia's tech is following through with the rest of the tech sort of sectors here in the region today. And it's really been really brought up by the likes of all of them, right? Alibaba, Meituan's up some 2%. Xiaomi's also up in similar measure as well. Offshore RMB is holding around that 682 level here, but you are seeing 8 shares, we're doing pretty well here today. So there you go. Things are still looking pretty good as you take a look at how things are looking at, even when it comes to not just the tech side of things, but even Morgan Stanley coming out with an interesting note. So they are more bullish when it comes to Hong Kong property now. So they're upgrading the likes of Henderson Land. So the Hong Kong property gauge, there you go, we're up some 2%. So they're saying a recovery in the property market, really broadening and not just the residential sector now.
Yes. So Link REIT was also included in that upgrade coming through from them. Let me just quote the analyst here. We have turned more bullish, driven by strong sell-through, rising prices at subsequent launches phases, and, of course, declining inventory levels. Just to also say, we're looking at HIBOR, which, by the way, I think on Thursday actually saw quite a meaningful pop to the upside, but I think fundamentally it seems that we are in a good place right now. Very quickly, casinos. We had some data coming through, of course, late last week. We talked about this too. There was a bit of a miss. You had high rollers, of course, still staying away, at least in large part. MGM is down about 3%. Goldman is out with this upgrade on Minimax. It's coming up on your screens. Very shortly, of course, this new AI plays are coming through. So Minimax, there we go. Wow. Okay. Wow.
So they're saying stronger revenue prospects driven by an expected new model launch, right? So they're certainly looking at that. They said basically buy the pullback. I think it's been down more than 40%, the Hong Kong listed shares from their March high. So they say favorable risk reward moving forward here, just given this whole AI full module footprint that they have.
Okay.
The pure plays.
As a pure play, right? 11%. I mean, unrelenting so far on this. Okay, the other story is on autos. So I think BYD reported last week, right? And I think a lot of different angles to that story. Was it cautious? Was it actually the bottom? HSBC joined us when BYD reported, and they actually thought that the first quarter was the turning point for the car sector. We are seeing mostly gains across those screens. Of course, Geely has been the outperformer in that sector, so we're seeing quite the opposite play out as we speak. For some final thoughts, maybe we could start with autos and then we get into other things. Eugene Hsiao is still with us, out of New York, head of China equity strategy at Macquarie Capital. Eugene, thank you for being patient and sticking around. Why don't we, just your thoughts on autos. We're done pretty much with earnings there. I think we have a few left over, but just your thoughts on, has the sector turned the corner here?
Yeah, I think that the first few months, Q1, especially February, was very poor numbers, especially for domestic EV demand. The April numbers were just out last Friday, and we've seen, I wouldn't say a major sequential improvement, but at least a flattening. And I think that's probably the first step that people are looking for. But I think the more interesting story, specifically for BYD and Geely, is essentially the export numbers. And those remain very, very strong. So I think for the full year to date, BYD is up close to 60%. Geely is close to like 150% year over year. So this is why I think that story and those stocks have started to perform a bit over the last couple of months. For the domestic market, it's still a bit of a bifurcation between the mass market EV players and the premium players. So we're seeing, again, people like Li Auto we're seeing on the screen right now have performed a bit better because their April sales numbers were quite solid.
I think they were still talking about some cash discounts when it comes to BYD. In terms of just pricing strategies moving forward, have you seen signs of at least the price war letting up now?
Yeah, overall, we think that the like-for-like price declines are going to taper off. And we've seen that in the data, actually. The discount levels in China have more or less flattened over the last 6 to 9 months. That said, I think the strategy has really shifted to what's called value for money. Essentially, it's like a bigger car or slightly higher spec car, but at the same price as a similar model that might have been a little bit cheaper before. So you could argue that's also a degree of discounting, but it's just not as obvious, I would say. But that said, the other thing that's interesting is we're actually starting to see a degree of price hikes in the Chinese auto market as well. Like the new Xiaomi refresh of their popular sedan, the SU7, was at a slightly higher price. And also very recently, BYD actually raised their price of their advanced ADAS system for some of their cars, which is quite interesting. So overall, we actually think the pricing trends will be quite stable for China, but the competition, of course, remains exceptionally fierce.
As a beta play, though, and since you mentioned competition, I think we need to worry about, them against each other. But I can't help but think about the Japanese car makers in the late 70s, early 80s. And you mentioned exports, right? Is this a no-brainer long-term beta play, Chinese autos, Eugene?
I would say it's the only play for China autos is really thinking about exports. I think right now, the Chinese auto market, in terms of total growth, there's not much to play for. I mean, it's already the biggest auto market in the world, over close to 24, 25 million units per year. But long term, I think that growth rate is low single digits at best, right? So for any of these companies to really sustainably grow going forward, it has to be overseas. And I think that over the last couple of years, some of these companies like BYD, like Geely, have been making a big effort in terms of building out their footprint in a lot of the key geographies, both in terms of their dealer networks, as well as we're going to see this year a lot in the localization side.
What does it tell you about consumer sentiment at the moment, too, Eugene? There's signs, I guess, some green shoots right now, and there's a lot of narratives out there that, there could be some reflation. You have, obviously, inflation is somewhat, I guess, flat or in somewhat little bit of positive territory. How much can we really glean on that here, that maybe things are really on the up now?
It's a tough one. I would say that, for example, the Q1 GDP numbers for China were out, a couple of weeks ago, and it was 5%, which is probably ahead of most people's expectations. But when you break that down, a lot of that remains still in that manufacturing export camp, right? The domestic side of the picture, real estate derivatives, things like that have remained weak. I think sentiment overall, I would say it hasn't necessarily improved, but it hasn't really gotten worse. So you can call that a good thing, I guess. But I would say that overall, we have not really seen a major pickup in consumer sentiment that makes me feel like there is a strong reflationary cycle coming through on the consumer side.
What about defensive strategies within the equity market? Things like yield, income. Does that have room to run, or almost a semi-permanent place in strategies this year?
Yeah, that's right. I think at the beginning of the year, I don't think people were necessarily focused on some of their more defensive names, like let's say banks. But what we've seen, especially since the Iran conflict, is that some of the more defensive plays in China, like banks, have actually performed exceptionally well. And I think this is partly because that playbook that really worked in 2021 through 2024, let's say, has come back into the picture. In times where there's a lot of uncertainty, when we don't really know where global growth could be heading in, especially in the second half of this year, it sort of is, a safer thing to be looking at some of those yield names, some of the more stable SOE names, to give you a bit of a hedge in this type of environment.
Eugene, thanks so much. Eugene Hsiao there, head of China equity strategist at Macquarie Capital. Yeah, we'll leave it to go to bed now. It's getting late there in New York. Thanks so much for your time here this morning. We're watching something that's very carefully here in Hong Kong, and a high-profile insider dealing trial begins in the city today against Sergantii Capital Management and its founder, Simon Sadler, and former trader, Daniel LaRocca. Now, they've all pleaded not guilty. Let's bring in Min Lo, our China correspondent. She joins us now from outside the Wan Chai District Court here in Hong Kong. So give us the latest on what's happening now.
Yes, we just saw Daniel LaRocca and his legal team just enter the courthouse about half an hour ago. The rest of the people are already in the courthouse. It's just beginning now. This trial is set to happen over the course of a month, and it is regarding an alleged insider trading case related to a block trade back in 2017. So at that time, an American hedge fund firm, Lone Pine Capital, was looking to offload a 10% stake in Esprit, a fashion retailer listed in Hong Kong. Obviously, 10% is a huge thing, right? 195 million shares that would obviously move market and cause the stock price to fall. And Sergantii got wind of this impending deal. Ahead of that deal, they then decided to sell their own stake of Esprit. They sold 1.5 million shares, and they also short sold about 130,000 shares, meaning they borrowed those shares to sell in order to lock in profits when they buy them back at a later date. And so we saw unusual price movements in Esprit's shares in the days ahead of the block trade. And this entire case really rests on what sort of privileged information Sergantii had gotten hold of and whether they acted on material non-public information to sell those shares and lock in those profits.
Yeah, so Min, I mean, suffice to say, a lot of folks in the industry are glued to developments.
Sorry, I lost you, David. Can you repeat?
I was just saying that a lot of folks in the industry, and I'll speak up, are glued to developments here. Any early implications that we should note in as far as the banks? Okay, yeah. That's what happens when you're in Wan Chai every now and then. Okay, we'll try and fix the gremlins for you, and okay, yeah, we'll sort some things, and hopefully we get a better connection to Wan Chai in a moment. Right, coming up here on show as well, we'll try and sort that. Taiwan's opposition leader tells us about her planned U.S. trip and a request to meet President Trump. We hear exclusively from the KMT chairperson coming up next. This is Bloomberg. All right, Star Wars Day. May the 4th be with you. It certainly is with the Hang Seng Tech Index. Really good start to the month. We're up 3%. Almost every single stock, with the exception of one or two, are actually down. Xiaomi's leading the charge. I think we're up about 6-7%. Best day. There we go. Best day in about a year or so. But as I speak, the force seems to be dwindling on this one. We're coming off highs very, very quickly. Still up 3%. 5,000 is the level to track there.
At least we're starting the month off on a positive note for HS Tech for the month of May for all you millennials out there.
It's gotta be.
Yeah. All right. Let's switch gears and talk about Taiwan. Taiwanese President Li Jing-de has visited the southern African kingdom of Eswatini after an earlier trip was derailed when several African countries closed their airspace to his aircraft. Now, Li posted on X saying that Taiwan would not be deterred by external pressure and would continue to engage with the world. China criticized the visit, accusing Li of sneaking onto a foreign aircraft to leave the island.
Yeah, and the head of Taiwan's main opposition party has actually asked, meanwhile, effectively here, has asked to meet with President Trump on a planned trip to the U.S. Speaking exclusively to Bloomberg, KMT chairperson Li-wun actually told us that she has high expectations for a visit and that Beijing is aware of her plans.
我到美国去访问从来不是秘密，而且我已经
My visit to the United States has never been a secret, and I've been discussing it for a very long time. I personally have high expectation for our visit to the US, so Beijing is certainly aware of this. I believe the message is that so far, the responses we have received from Xi Jinping have been positive and friendly.
反应都是正面的，是友善的。
What is your first blush impression of Donald Trump?
那当然，川普总统全世界大家都非常的关注他的一言一行，他的确是一个
The whole world is watching his every word and action closely. He is indeed completely unconventional and unpredictable. However, I hope that within President Trump's limited term, I believe he also hopes to create a legacy that will be forever remembered in history. If this includes achieving peace in the region, peace across the Taiwan Strait, and world peace, I believe it will be extremely important for President Trump's historical standing.
对川普总统的历史定位来讲是非常重要的。
You say you would like to meet Donald Trump. Are there certain assurances that you would like to get from him as far as the defense of Taiwan or anything particular assurances you would want to get from Donald Trump?
我认为最重要的讯息还是和平。
I believe the most important message is still peace. And I hope that, as everyone knows, Taiwan is an economy with very close trade ties to the world. Therefore, world peace, free markets, and trade are of paramount importance to Taiwan.
自由的市场跟贸易对台湾来讲至关重要。
Obviously, President Li Jing-de believes more spending for military, a T-dome for Taiwan. Defense spending equals sustainable peace, according to the ruling party right now. You believe Taiwan should spend less. Can you give us the number you're thinking the Kuomintang, the KMT, would be okay with and would approve?
重点不在数字，而在于台湾需要。
In fact, the key point isn't the numbers, but rather that Taiwan needs a genuine defense force capable of self-defense. That's why we have continued arms purchases from the US since World War II. There is no doubt that KMT has a strong support on that. But the problem with these numbers today is that they lack substance. We can't authorize something without a clear plan. We can't give the DPP a blank check. Our difficulty lies in the fact that the specific figures, details, and projects involved are unknown. This is why we can only offer 380 billion Taiwanese dollars at present. But this is not just 380 billion. We fully support the arms purchase from the US.
我们是完全支持对美军购的部分的。
I have to ask you about another very sensitive issue, and that is, of course, the differences and the diplomatic row between Beijing and Tokyo.
Yeah.
Because of Takaichi-san's comments about Taiwan, about any invasion of Taiwan would be a survival-threatening situation for Japan. You know the situation it is now. But you were in Nanjing. You made some comments recently about Japan's colonial past.
Yes.
Can you clarify how damaging it might have been, or if you feel it was damaging, those comments from Takaichi-san about Taiwan, that has made the situation more perilous for Taiwan? Or what are your views of her comments? She's backing Taiwan. She's backing Taiwan.
Yes, I know. 我认为高市早苗首相的发言
I believe Prime Minister Sani Takaichi's remarks were quite provocative to Beijing. Of course, those of us in Taiwan hope for regional peace and stability. Therefore, I've always advocated a different approach to discussions, not focusing on whether Taiwan or Japan is in trouble, but rather striving to ensure that Taiwan is safe, Japan is safe, and everyone is safe.
而是去努力让台湾没事，那日本也没事，大家都没事。
And that was Taiwan's Kuomintang Party chairperson Zheng Li-wun speaking to Stephen Ingle in Taipei. In some other world news this morning, President Trump says he is raising tariffs on cars and trucks from the European Union to 25%, claiming that the bloc has failed to fully comply with the trade agreement. Trump also says the levies will not apply to automobiles built in U.S. facilities, arguing it will force European automakers to move production to the U.S. faster. The EU rejected Trump's claim that it's not complying with the trade deal. The Philippines is accusing China of conducting illegal marine research in its waters. The Philippine Coast Guard calls the move a clear violation of international law, threatening to deploy aircraft and vessels to drive away the Chinese ships. The foreign ministry in Beijing says its vessels are conducting normal scientific research, urging Manila to stop what it calls dangerous actions. All right, take a look at how Hong Kong markets are faring the first month of May here, well, first trading week of May, I should say, and things are looking pretty good right now. Take a look when it comes to the Hang Seng. We're up 450 points here right now. HS Tech there is up some 3% here, so really joining in on this tech rally that we're seeing across the region. 8 shares also above the 8,800 level. We've got plenty more ahead. This is Bloomberg. In some corporate news this morning, Berkshire Hathaway's cash pile soared to its highest ever as operating earnings jumped in Greg Abel's first quarter as CEO. After a slight decrease late last year, the cash hoard now jumped to $397 billion. Abel also resumed buybacks, handing shareholders a payout for the first time in more than a year. Berkshire shares have slipped since Warren Buffett announced last year that he was retiring. Australia's largest business lender, NAB, has missed first-half profit estimates due to higher software costs and a worsening economy. Cash earnings also fell short, though the bank will pay an interim dividend of 85 Australian cents per share. The CEO, Andrew Irvine, says the firm is in good shape as it enters a more volatile environment after strengthening its balance sheet. GameStop is making an unsolicited offer to buy eBay for about $56 billion at $125 a share in cash and stock. GameStop CEO Ryan Cohen would serve as CEO as a combined company. Cohen earlier told the Wall Street Journal that he's prepared to run a proxy fight and take his offer directly to shareholders. BYD's overseas sales jumped 71% last month from a year earlier, spurred by surging gasoline prices. But total deliveries did fall 16% as softening demand at home in China dragged sales down for the 8th month in a row. The company is counting on new models and fast-charging batteries to drive sales for the rest of the year.
Okay, a check on markets and GameStop. That's a bit of a flashback, isn't it?
Yeah, and eBay.
And eBay, yes. You know what also caught my eye on the weekend? You know what's back? Friendster is back. Did you see any news?
Is it?
Yeah, Friendster is back. So apparently no algorithms And again, this is anecdotal based on what I've seen on social media, right?
You know what's also making it?
What? Go.
Mahjong to the mainstream now.
Yes, I saw that.
Yeah. Anyways.
How do you think about that?
We could go all day. But I won't talk about it now, how I really feel about that.
Just buying time, because I think we have some time remaining here. Okay, well, I think we have about a minute left. There we go. So tech is really a big feature, surprisingly a big feature in the rally today. And as you can see, it's Xiaomi's leading this, and Hang Seng Tech is up 3%. So we're actually now very close to the record on MSCI Asia Pacific Index. Because you have Korea, you have Taiwan, and then now you have the big platform companies. Morgan Stanley's out with a positive and encouraging and constructive bullish note. That's me buying more time there with more superlatives on Hong Kong property. So it's upgrading, I believe, Henderson Land and Link REIT, Swire Properties as well in here, 1.5% to the upside. And apart from that, we're looking at the Hang Seng Index. We talked about this. Taiwan and Korea are also doing very, very well. First, I wonder if this has anything to do with it's just the first calendar trading day of the monthly calendar.
Yeah.
And, you know, as we, I don't know, build your books into what should be a sell in May and go away, but doesn't seem to be the case.
A bit more balancing there. But yes, Asia Tech certainly playing catch up to Taipei and Seoul this morning. You're watching the China Show. Welcome back to the China Show. Welcome back to work if you're coming back from that long holiday. Well, 3-day holiday, but certainly that long weekend. It was a bit of a rainy one, but here, take a look at how we're starting off this trading month with the May the Force be with you. Seems like the force is behind equities here this morning, Dave.
Yeah, Star Wars Day. The weather was strange on the weekend, wasn't it? Right?
It was.
It was immaculate on Friday.
It actually cooled, and then it got humid, and then it rained really hard, basically, all in one.
Yes, yeah, kind of like my mood sometimes.
I can attest to that. Just kidding.
Yeah, changes as quickly as the weather. And I can't have a lot of coffee this month, so brace yourselves. What do you mean?
Just kidding.
Yeah. Okay, let's look at what are we doing now. Hang Seng Tech Index. As bright as the sunlight can be. There we go, 3.3% to the upside on Hang Seng Tech. Actually, this is a fantastic day to be in equity markets. Look at that. But it's also worth pointing out, right, that we were shut on Friday, so this is a split the difference between 2 trading days, and you probably get a normally modest but noticeable upside on price. Asia is now 1.7, so we, you know what, so our producers are about to do a fact check on this. How close are we really exactly to the all-time highs? We're very, very close last we checked going into the session today. This gets us a lot of that way. Visually, you see, of course, we are 0.4% about, maybe, away from that peak, pre-war peak, which was the all-time high.
Yeah. So we're getting pretty close to that here today, especially the fact that now Asia's tech is finally catching up to what you're seeing in Taipei, what you're seeing in Seoul. So at least that whole trade still comes back in a big way to start May. Take a look when it comes to U.S. and Euro futures and how things might play out on this Monday for them. It looks like things are still pretty positive there. NASDAQ futures are up about 1/3 Euro stock futures are also higher here this morning as well. In terms of oil markets, gas markets is what we're seeing when it comes to what we're the headline-driven sort of moves that we've seen, right? So there was the announcement from President Trump that the U.S. is going to help ships through the Strait of Hormuz. So we quickly saw oil prices drop at the early get-go. We've eased off that just a little bit. Seems like traders are still quite uncertain on how this is all going to look like. We're not even sure, according to some reports, on the role that the U.S. Navy is going to have in some of these escorts as well. So that leaves actually more lingering questions on what, how effective it really will be in really kind of taming all this. And then, of course, what does this mean for peace talks moving forward as well, Dave?
Yes. And what does it mean to be a neutral ship? Right, I think it's a key question there. But yes, it is something that we're tracking very closely. In fact, just have a look, at the U.S. President's post specifically on that, because it was enough at least to move the oil markets ever so slightly to the downside. We're at 108 right now, as we were pointing out. Here we go. For the good of Iran, the Middle East, and the United States, we have told these countries that we'll guide their ships safely out of these restricted waterways so that they can freely and ably get on with their business, right? A lot of these vessels have been stuck for many, many, many weeks, of course, in the Gulf, and really more on a humanitarian aspect to this as well.
Yeah, so there's that, and then there's this whole peace proposal that Iran has added and included, which was a 1-month sort of deadline on talks for a deal to reopen the Strait of Hormuz and end the fighting in Iran and Lebanon. Trump did cast a bit of doubt on that as well, so certainly there's still a lot of questions moving forward here on where we are in this discussion. But yes, what's it enough to broker an end of this deal and this war is certainly going to be still something that we're going to be asking plenty of our guests here.
Absolutely. A lot of question marks remain and as far as that is concerned. But equity markets seem to be moving on quite quickly, if not already in some cases. David Savage is with us here on set, our MLive strategist, to talk us through all things equities, and we'll talk about the intervention in a moment. But yes, are you surprised by the rally that we're seeing today?
I mean, at this point, I don't know that we can be surprised. I think you just have to be. A part of it, again, is catching up to what we saw on the U.S. session on Friday, so South Korea and Taiwan in particular. But I think, again, it just continues on this theme of the divergence between, particularly in Asia, the tech haves and everyone else, right? So the gains we're seeing in the benchmark index, the Asia-Pacific index, it's really being driven by tech and AI-adjacent names, right? So in the industrial sector, for instance. So again, I think that's just been the trend we've seen post-ceasefire, and it just looks to be the trend moving forward, too.
Yeah. Let's talk about the yen. I mean, just when we were all out the door to go to a long weekend, there's this kind of rumblings that, they did intervene. How should we interpret this move?
We had a bit of everything last week, right? Like, mega cap tech earnings. We had earnings here in Asia. We had, noises from the Fed in terms of the easing bias discussion there. And then, of course, just add in yen intervention. So any of those could have been huge stories, and we had them all last week. So the yen intervention, it's interesting. I think it did push down dollar yen to around 155.50. We're back up to around 157 today. We have seen historically that we typically get additional actions later, and it certainly will be interesting to see if Japanese authorities want to take advantage of the thin liquidity we have. Japan's closed today and tomorrow. London's closed today as well. So certainly something to watch, but ultimately this is about disrupting that negative feedback loop we've seen between higher oil, higher inflation pressures, higher JGB yields, and then weaker yen. And so it's about disrupting that, but ultimately it really can't undermine entirely the fundamentals that are driving that feedback loop.
Right. Disrupting is, to your point, right, very different from breaking the cycle altogether. Is this, I mean, it certainly worked. How long will it work for, I think is the question.
I think the other side of that coin, right, is, where are we seeing the U.S. data trend, right? So we get unemployment data or jobs data later this week. To this stage, what we're seeing is U.S. data more resilient than we've perhaps thought? And if that's the case, if we start to see, we've already seen to this point those rate cuts get priced out. Do we start to see rate hikes get priced in? That'll really start to put upward pressure on dollar yen. And so again, in that sense, they can continue to intervene. They continue to jawbone here and there, but it'll be really difficult to lean against those fundamentals.
David, thank you. David Savage there, our Bloomberg MLive strategist, joining us here in our studios. And still ahead, we're speaking all things bonds and credit here with Anitza Nip of UBP. She's going to talk to us about Asia fixed income, U.S. rates, and where investors are really finding yield at the moment. Plus, as Taiwan's president defies pressure from Beijing with a surprise visit to Africa, we're getting analysis from the Hudson Institute's Jason Hsu. Much more ahead. This is Bloomberg. All right, your week ahead is looking like this here right now. It's shaping up to be a pretty decent week when it comes to data and meetings here. We're going to kick off things with the Australia RBA decision that happens on Tuesday as well. You got some inflation numbers coming through from Southeast Asia like Indonesia, Philippines, South Korea as well. Of course, we talk about Hong Kong. First quarter GDP comes out tomorrow as well. That's a key one to watch after what Paul Chan mentioned over the weekend about expecting 5-year highs for growth here in the city, just given the tourist arrivals and and the numbers that we've been seeing even during this Labor Day holiday. And to wrap up the week, the big one perhaps is, of course, that job support out of the U.S., Dave.
Yes, and I think to the point that David Savage out of our MLive team was making a few minutes ago, right, that will determine to a large extent how effective the suspected intervention of the Japanese will have and as far as dollar-yen is concerned, and of course this world of rising yields globally, including, of course, in Japan. Joining us now to talk us through all things fixed income, duration, and currency exposure, Anitza, Head of Asia Fixed Income Research at UBP. Very nice to see you, and good morning.
Good morning. Very nice to see you after the long weekend.
Yeah.
Yes. How was your weekend?
It was good.
It was good? Great
Yes.
weather, right?
Yeah.
In a world where we don't get any more rate cuts coming out of the Fed, which seems to be a very strong case to make right now, what is the appropriate fixed income exposure in that scenario?
Well, we still reckon fixed income is good for carry. In particular, even if you're talking about maybe no rate hike and no rate cut, but not signaling any rate hike at the moment. So what we are thinking would be, it's still a very important element in the fixed income portfolio. In particular, we look at some of the quality credit. I think whether it's going to be any rate cut, depending really on how is it going with the war and also the inflation. If the inflation being contained, I think there's still potentially some chances of being rate cut. But at the moment, for the Asia and also global fixed income, what we like would be on the high yield because they would be able to provide the carry. We still see a lot of demand, and you can see that the issuance basically has been well supported. Price guidance actually tightened quite a bit. So it's showing you that investors are still putting money to work on fixed income.
What does that mean for spreads? Do you think that's actually good for spreads? Or?
Well, it's interesting, right? I mean, credit spread after the war actually widened out, but now actually it's back to almost unchanged. It's also demonstrated that there's a lot of demand for fixed income. We reckon credit spreads could be resilient, given the fact that supply seems to be quite orderly and demand seems to be strong. In particular, when you look at Asian high yield, the supply has been quite limited. So that's why we reckon that credit spread should be resilient at this point of time. So therefore, when you look at IG, it's pretty tight. And the most of the return is actually from the U.S. Treasuries, which we reckon, maybe not something, too interesting. For IG, we would prefer some of the U.S. mortgage-backed securities because as a diversifier, into the market.
I think this week, apart from U.S. jobs, there's a refunding announcement out of the Treasury. Is that consequential in your view?
I think, it's also important, for people to look at, what the supply looks like. And in particular, it would basically impact, more on the maybe, the less than 5-year paper yield.
Build notes and
correct, exactly.
That sort of thing. What's interesting, too, is to the point that you made on supply, right? A lot of Asian issuers seem to hit the markets, not just for whatever reason. They seem to hit the markets a lot more in April in terms of issuance.
Yeah.
What are you hearing as far as supply for May is concerned? Was that front-loaded just by a month, or do we get more coming in the next few weeks?
I think, interestingly, for April, because the market stabilizes, right?
Yeah.
So that's why you see a lot of issuances, which they really need that for refinancing. For May, we reckon, it still be, a good supply in the market, both on the corporates as well as bank side, all over Asia. High yield may be still a bit limited.
Okay.
But at the same time, we reckon, the supply could, still be there. And one interesting point in the market would be a lot of them actually also tap the local market. So that also explains the reason why the supply, could be limited or orderly. And some corporate actually also tender their bond if they don't, necessarily have to pay a higher coupon. So that's, the thing governing, what's going on in the market.
What's going on in Hong Kong? I mean, there's been these pretty big corporate issuance, some, quasi-sovereign notes that you mentioned there as well. I mean, I think it was a record in terms of global and local entities raising 74 billion Hong Kong dollars through the public dollar bond issuance market. For years, they've been struggling to find issuers and tepid demand. What's driving this change, you think?
I think it's, very exciting at this point because you've got more issue in the market, but I just don't think that's, determined the trend. Basically, when you talk about the quasi-sovereign credit, what they need will be because they need the capital, the refinancing and also the capital expenditure. They have project on hand. That's why they issue in Hong Kong dollar. And I think, it would be good for people to invest in Hong Kong dollar because some of the banks really need the 5 years issue, and some of the insurance company asset manager really need the long end. So I think could be some other quasi-sovereign credit would come to the market, but I don't particularly think that it would have a lot of supply because the market is more dominated by private placement or certificate of deposit, in the Hong Kong dollar space.
How much of that, the explosion in issuance, could be tied to this pickup in the economy and the outlook?
Hong Kong as a safe haven.
Yeah, definitely. Because if the market, the economy picked up, definitely there will be more project, more capital expenditure, and some company would come to the market. But I think Hong Kong dollar market would more focus on really well-known issuer. I mean, smaller name, it could be difficult. Maybe some foreign names, but depending on the Hong Kong dollar swap market as well. If it's favorable, then some foreign names, good names will come to the market as well.
What else have we missed? I mean, the JGB market has been interesting. We talked about yen intervention last week, or at least what we gathered to be some sort of yen intervention. How should I be looking at the BOJ and moving forward here, and what to do with JGBs?
Well, basically, we see if the CPI number is going to be, strong, then BOJ may hike in July. April or June June wouldn't be our base case. We see that, the 10 years JGB could reach around 2.6 within this year. At the moment, it's around 2.5. It's, not far from there. But I think, a lot of things have factored into the long end or, on the JGB curve itself.
Inflation-linked strategies, just to go back to the macro before we let you go. How worried do we need to be over inflation? I mean, oil is still at 108. It's been at these levels for many, many weeks now. It doesn't seem to be the market is worried. Is that the right conclusion to make?
Well, I reckon the market basically is still think that the inflation is going to be, the jump could be temporary.
Okay.
So not particularly seeing clients, looking into a lot of inflation-linked products at the moment. But if that persists, the trend may change.
Okay.
Anitza, thanks for kicking off the week with us. Anitza Nip there, Head of Fixed Income Research for Asia at UBP. We're going to take a quick break. Hopefully stay on. This is the China Show.
Please. Welcome back. This extremely high-profile insider dealing trial begins in Hong Kong today. That's against Sergantii Capital Management and its founder Simon Sadler and a former trader Daniel LaRocca. Now, they've all pleaded not guilty. Our China correspondent Min Min Lo is standing by for us outside the court. In fact, at the Wan Chai district here in the city. Min Min, so talk to us. What is the latest there?
Yeah, so the court case just began about maybe 1 hour ago. And at the start of the case, the defendants said that they understood the charges and they repeated their plea of not guilty in this accusation of insider trading. And the case really is about whether or not the defendants, which is Sergantii Capital, the founder Simon Sadler, and a former trader Daniel LaRocca, whether they had acted upon non-public material market-moving information to sell some shares of Esprit, a fashion retailer, ahead of an impending block trade. So the trial is ongoing. Is expected to take place over the course of a month. We are not expecting any major headlines today.
And obviously this is, as we talk about, a case that we've been watching for some time now. What are some of the implications, and how are really banks and brokerages in Hong Kong, how should they be looking at this case now?
Well, obviously, brokers and traders will be watching this very closely just for a sense of how strictly the rules are being enforced, how heavy the penalty would be, because insider trading charges in Hong Kong carries a maximum penalty of 10 years in prison. But because this is being held at the district court can only hand out a maximum sentence of 7 years instead of 10 years. You have to go to the high court for a 10-year sentence. And there is also a maximum fine of 10 million Hong Kong dollars, which is about 1.3 million US dollars. Not a big deal in the world of block trading, but of course traders will be watching very closely because it concerns the sort of burden of compliance that they have, right, in this very fine line when it comes to offering market-sounding information. This is the sort of information that sellers or bankers would offer to potential brokers and buyers just to gauge the interest for a deal, and they have to make sure that whatever information offered is vague enough not to reveal the specifics so that the potential buyers cannot act on confidential information. So it's a very fine line here, and soon after these allegations against Sergantii came up, the Hong Kong SFC also tightened the regulations further when it comes to market-sounding information. There are now rules about how the information should be shared. They have to follow a standardized script and, use authorized recorded channels. The brokers have to keep those records for 2 years. And at the time, there had already been a lot of pushback from market participants who say that it would put undue burden on them and that it could potentially push away market-sounding activities from Hong Kong in a city that is, of course, trying to defend its status as this global financial hub here.
All right, Min Min, thank you. Our China correspondent, Min Min Lo there in Wan Chai for us with an update really on what's been going on in that trial that began today. Another sort of big meeting that we're tracking, of course, today is Japanese Prime Minister Takaichi. Now, she has arrived in Australia for a 3-day visit with defense, energy, security, and critical minerals supply on the agenda. Let's bring in Bloomberg's Paul Allen. He joins us now with more. And Paul, just tell us more about the significance and the timing of this visit.
Yeah, the timing very significant against this uncertain geopolitical backdrop. Of course, Japan, for its part, would like more to do with rare earths, LNG supply as well. That's certainly something Australia can help with. And there's already been the Linus Agreement, which is going to see the first shipments of rare earths to Japan from Australia as well. And for Australia's part, it needs refined fuel from Japan also. But it's not just the timing of this, it's the frequency of these meetings as well. Takaichi, of course, has only been Prime Minister for a little over 6 months in Japan. This will be her 4th meeting with Anthony Albanese. So necessity really making this already close relationship even closer. And it was just a couple of weeks ago that Australia and Japan signed a $7 billion deal for 11 new frigates. Japanese firms are now the 2nd largest investors in Australia. So geopolitical realities really driving the two countries closer together at the moment.
Paul, before, her last stop before Oz was in Vietnam. What were the agreements, remind us, reached on that specific visit?
Yeah, very similar themes, actually. Deals to do with rare earths, because Vietnam has the world's 6th largest reserves of rare earths. Also agreements on communications, infrastructure development, irrigation as well. And Japan really wants to lift investment in Vietnam to $5 billion annually, get two-way trade to $60 billion by 2030 as well. So it's very similar themes to the sorts of deals that she's been seeking here in Australia. Timing also interesting because the Defence Minister for Japan, Shinjiro Koizumi, is also going to be in the Philippines this week, where he'll be overseeing defence exercises. Japan's self-defence force going to be involved, fully armed, participating in those military exercises for the first time. So once again, a real reflection of the geopolitical realities of the moment.
Paul, thank you. Paul Allen there in Sydney for us. Just a quick update of some individual movers we're tracking across equity markets. A2 milk is down substantially today. And the news flow is really, I think, unsurprising given the news flow, is my point here. We're down 11%. So the company is actually recalling batches of products sold in the U.S. And that's after a toxin was detected, that is a toxin that is linked to vomiting and nausea, marking its first brush with this contamination scare that has, I guess, in some ways, not the company itself, rattled the industry, and shares are down substantially, of course, on the back of that news. The opposite is what we're seeing across Chinese tech, specifically with the likes of Xiaomi and some of the EV players. And I think the intersection between Xiaomi and EVs is also when you look at tech, for example, and SenseTime, which is also gaining quite substantially today. And yeah, those two things. In fact, just on volumes itself, Xiaomi seems to be dominating proceedings right now. You wouldn't be able to tell, by the way, just looking at volumes on the Hang Seng Tech, and a lot of that is Xiaomi, that mainland markets are shut today. So it is really punching well above its weight on the index itself, and as far as points and volumes are are concerned here.
Yeah, the April delivery numbers were pretty upbeat. So I
Yes.
think that's what's really leading that charge here when it comes to the EV sector here today. When you take a look when it comes to the big movers in the region, it's still sort of the big winners out there, right? The SK Hynixes, the Samsung. Look at SK Hynix. It's up some 9%. MediaTek in Taipei is also up close to 10% gains here with TSMC up 6. It is a catch-up story, just given that we were shut on Friday. So, of course, the moves are a little bit more magnified here today, but still the preference is, of course, still leaning towards that whole AI trade in North Asia.
Okay, MSCI Asia Pacific is now a nose hair away from the top that we hit back before the war began. And as you can see, we're extremely close now because of this tech rally we're seeing in many parts of the equity market in Asia. And that's, of course, notwithstanding mainland markets and Japan are shut today. Lots more ahead.
Well, welcome back. Taiwanese President Li-wun has visited the southern African kingdom of Eswatini. That's after an earlier trip was derailed when several African countries closed their airspace to his aircraft. Now, Li posted on X saying that Taiwan would not be deterred by external pressure and would continue to engage with the world. China has criticized the visit, meanwhile, accusing Li of sneaking onto a foreign aircraft to leave the island. Meanwhile, on Sunday, Taiwan's government condemned China after the sudden cancellation of an annual digital rights conference that was scheduled to be held in Zambia, saying Beijing pressured the host country over Taiwanese participation.
And, that then takes us to this conversation we had with the head of the opposition party. Taiwan's main opposition party here has asked, in fact, meanwhile, amidst all of this that's taking place, has asked to meet President Trump on a planned trip to the U.S. Speaking exclusively to Bloomberg, KMT chairperson Li-wun actually told us that she has high expectations for a visit and that Beijing is aware of her plans.
我到美国去访问从来不是秘密，而且我已经
My visit to the United States has never been a secret, and I've been discussing it for a very long time. I personally have high expectation for our visit to the US, so Beijing is certainly aware of this. I believe the message is that so far, the responses we have received from Xi Jinping have been positive and friendly.
反应都是正面的，是友善的。
What is your first blush impression of Donald Trump?
那当然，川普总统全世界大家都非常的关注他的一言一行，他的确是一个
The whole world is watching his every word and action closely. He is indeed completely unconventional and unpredictable. However, I hope that within President Trump's limited term, I believe he also hopes to create a legacy that will be forever remembered in history. If this includes achieving peace in the region, peace across the Taiwan Strait, and world peace, I believe it will be extremely important for President Trump's historical standing.
对川普总统的历史定位来讲是非常重要的。
You say you would like to meet Donald Trump. Are there certain assurances that you would like to get from him as far as the defense of Taiwan or anything particular assurances you would want to get from Donald Trump?
我认为最重要的讯息还是和平。
I believe the most important message is still peace. And I hope that, as everyone knows, Taiwan is an economy with very close trade ties to the world. Therefore, world peace, free markets, and trade are of paramount importance to Taiwan.
自由的市场跟贸易对台湾来讲至关重要。
Obviously, President Li-wun believes more spending for military, a T-dome for Taiwan. Defense spending equals sustainable peace, according to the ruling party right now. You believe Taiwan should spend less. Can you give us the number you're thinking the Kuomintang, the KMT, would be okay with and would approve?
重点不在数字，而在于台湾需要。
In fact, the key point isn't the numbers, but rather that Taiwan needs a genuine defense force capable of self-defense. That's why we have continued arms purchases from the US since World War II. There is no doubt that KMT has a strong support on that. But the problem with these numbers today is that they lack substance. We can't authorize something without a clear plan. We can't give the DPP a blank check. Our difficulty lies in the fact that the specific figures, details, and projects involved are unknown. This is why we can only offer 380 billion Taiwanese dollars at present. But this is not just 380 billion. We fully support the arms purchase from the US.
我们是完全支持对美军购的部分的。
I have to ask you about another very sensitive issue, and that is, of course, the differences and the diplomatic row between Beijing and Tokyo.
Yeah.
Because of Takaichi-san's comments about Taiwan, about any invasion of Taiwan would be a survival-threatening situation for Japan. You know the situation it is now. But you were in Nanjing. You made some comments recently about Japan's colonial past.
Yes.
Can you clarify how damaging it might have been, or if you feel it was damaging, those comments from Takaichi-san about Taiwan, that has made the situation more perilous for Taiwan? Or what are your views of her comments? She's backing Taiwan. She's backing Taiwan.
Yes, I know. 我认为高市早苗首相的发言
I believe Prime Minister Sani Takaichi's remarks were quite provocative to Beijing. Of course, those of us in Taiwan hope for regional peace and stability. Therefore, I've always advocated a different approach to discussions, not focusing on whether Taiwan or Japan is in trouble, but rather striving to ensure that Taiwan is safe, Japan is safe, and everyone is safe.
而是去努力让台湾没事，那日本也没事，大家都没事。
And that was Taiwan's Kuomintang Party chairperson Zheng Li-wun speaking to our very own Stephen Ingle in Taipei. Let's bring in Jason Hsu now, senior fellow at the Hudson Institute. He's also a former KMT party lawmaker. Jason, it's great to have you on the program. And just really just bringing it back to what we've seen of late, of China really in some ways trying different ways to isolate Taiwan, whether you talk about it used to be about poaching diplomatic allies. Now there's reportedly they're restricting, airspace and the global movements of the president. And then now even courting the KMT spokes and chairperson, Zheng Li-wun, to that visit as well. What do you make of what seems to be a change of tactics from China?
Look, it's clear that Beijing is doing it, sort of a two-pronged strategies. One is to continue the diplomatic coercion by dictating where the elected president of Taiwan can visit diplomatically, and continues to offer favors to opposition leaders and even to affect the defense budget and to influence the defense policies and defense capability preparations. Now, this is a serious and alarming issue when both Taiwan's diplomatic space is now oppressed by Beijing, and also Beijing continuously to control Taiwan's policy and as well as potentially defense budget through controlling an agency in Taiwan with a very small fraction within the KMT party that is pro-China. And this is a very dangerous trend that is going to move forward and are going to affect Taiwan militarily and politically.
Okay, complete that sentence for us. Where does this lead? And you mentioned the word dangerous, which is an interesting description here. So where do you think, if the current momentum sustains, paint the next few years for us?
Well, look, Beijing is not going to let go of its aggression or threat just because KMT is in office or DPP is in office. Its ambition to Taiwan is glaring and is persistent. So to continuously to influence Taiwan's defense budget through the opposition party is becoming a national security issue. If Taiwan cannot arm itself with asymmetrical capabilities and with enough of defense capabilities, we will fall into vulnerabilities and the victimhood of Beijing's coercion. And that is to say that we won't even have the right capabilities to defend ourselves. And this is just to deter Beijing's aggression. And now, without even enough and sufficient budget to plan the next 3 to 5 years, now it's becoming a big, big problem.
We got a big meeting coming up as well, Jason, between Presidents Trump and Xi this month. There's fears among the Taiwanese that maybe this Taiwan issue will make it into this meeting, and that maybe a transactional Donald Trump will maybe change or make a shift in Taiwan in return for some trade deal with China. How concerned should Taiwan be on that?
I think what we really worry that is Taiwan end up becoming on the menu, especially when Trump and Xi are prepared to meet, and at this moment in time, that our defense budget is still up in the air. As of today, Taiwan's legislative yuan is conducting the third round of a negotiation, and it's likely that the legislative yuan would move to the floor vote on May 8th. And so if the defense budget cannot be met with sufficient allocation, it means that President Trump going into that meeting with President Xi would have some sort of a leverage to tell Trump that, hey, look, Taiwan is not even sure of its own defense preparation. Why should U.S. arm Taiwan if Taiwan itself doesn't want to buy weapons? So that becomes itself a handover to Xi and making it easy for Xi to get the biggest victory out of this summit, which is basically to tell Trump to either reduce the arms sale or even to delay or even completely stop the already approved arms sales to Taiwan. So if Taiwan does not move quickly, Taiwan could easily become on the menu on the Trump and Xi negotiation.
And Jason, it seems politically, the bandwidth on a global stage seems to be narrowing for Taiwan. Will the economy take an impact? Does it matter for the economy, which seems to be doing extremely well?
Well, the economy is doing extremely well. Obviously, led by the surge of AI supply chain and as well as the chip sector led by TSMC, and Taiwan's stock market is at all-time high and surpassing that of London and several other key markets in the world. And so the country is enjoying a very thriving economy, but it's also alarming that it is concentrated on few stocks. And that is a problem when Taiwan is a geopolitical flashpoint. So we need to make sure that we have enough of capabilities to ensure that whenever the threat is imminent or is looming, that we have enough preparations to deter aggression at that point. And also semiconductor as part of the global supply chain is also very much a centerpiece of this as well. So if there's any sort of a contingency, I think it would have a global rippling effect on the semiconductor and the financial markets in the world.
The Iran war certainly has raised a lot of questions about whether this is an opening for China to move on Taiwan, just given that the U.S. seems to be very distracted with the Middle East here right now, and their presence in this part of the world has diminished. Do you think the prospect of a major conflict between China and Taiwan has actually increased, or do you think the opposite since this war began?
Yeah, look, we are worried about a U.S. strategic distraction because of the Iran operation, and as well as how Trump is eager to reach a deal with Xi Jinping, and in any sort of ways to make a concession politically to Xi Jinping. And also what happens to the Strait of Hormuz is a learning to people in Taiwan and leadership in Taiwan that any sort of a choke point that can happen on this type of a strait is very likely, as Taiwan Strait is very much also an energy tanker pathways around the South China Sea, as well as going through the first island chain in Indo-Pacific. So we are watching this very closely. But I think that Beijing is also learning the lesson as well in terms of if they want to blockade Taiwan, how would they stage such a way that it would make U.S. First of all distracted, but also make a deal to Trump that it's not easy for them to get involved, and so do the other allies as well.
Jason, thank you so much for spending the time, these few minutes with us. Jason Hsu there, senior fellow at the Hudson Institute, joining us from Washington just now there. Right. We're about an hour and 12 minutes into the cash market session here in Hong Kong. Mainland markets are shut. A couple of more, of course, since other markets open before Hong Kong. And man, oh man, check this out. So I think it's extremely rare that you see Korea, Taiwan, and Hong Kong move this much in tandem, which is quite rare because it's usually Kospi and Taiwan and not Hong Kong, or the opposite, right? And that puts us very, very close to a record here.
And look at SK Hynix. That's what's really lifting the Kospi here right now. We're talking about 11% gains here. So the Kospi's at a record. This on the back of what happened last week, right? You had U.S. tech earnings. Then, of course, the market was shut on Friday. So there is a big sort of catch-up story here. And also, there is some support given that, the Iran situation, there's talk about, really the resumption of shipping through the Strait of Hormuz. So all that kind of adds to a really good day of risk here. And so, therefore, we're taking a look at when it comes to SK Hynix. BofA Securities also just raised their price target to 1.8 million won for that stock in particular. Okay, so a couple of milestones that we're likely to hit given how quickly Taiwan and Korea. So we talked about this last week, actually. So Taiwan is, larger than Canada. It's larger than the UK. Dare I say, maybe in 2 weeks, Taiwan surpasses India. That's my fearful estimate. That's the hedge. So Taiwan is now about 4.5 trillion in market cap. India's about 4.9. And Taiwan closed $500 billion very, very quickly recently. So, and Korea's very close behind. So that's probably going to happen. At this rate,
it's when, not an if.
Yeah, they're taking big markets down by the week, it seems, right now. So, and you mentioned the first quarter GDP numbers that we got last week, which, nuts. Double-digit gains you're talking about, 13, 14%. It's the biggest growth we've seen since 1987, so 39 years, really. And you take a look at when it comes to PMI numbers and everything. I mean, it's really that whole chip export, silicon shield manufacturing theme that continues to dominate. And you're seeing that in Korea as well.
Yes. The good point we brought up with the guest early on, right? Well, politically, it's they're in a bit of a pickle. The economy doesn't seem to be showing any signs of that.
But we have been talking about foreigners are net selling still when it comes to Taiwan. That is one caveat.
Yeah, they're pulling back a little bit from this. Okay, the opposite of Tina, I believe. Anyway, okay, lots more ahead. This is Bloomberg. Right, welcome back. You're just in time, so we're there. We have taken out the previous peak. We'll see, of course, if this is where we end the day. But Asian stocks are now above the peak before the war began, and it effectively puts us at a record high on the regional benchmark as we speak.
Yeah, and of course, it's all thanks to really that AI trade, right? It's not just Korea, not just Taiwan coming back. We talked about how HS Tech, which has been sort of the laggard in all this, given the fact that there is that sort of software sort of exposure, and it really has been the Chinex that surpassed a lot more of the optimism and really where that AI play is, given that hardware supply chain is very much centered in the Shenzhen benchmark. But even HS Tech today is coming back and starting this trading month on a pretty strong note as well. So it brings us back to always to AI, Dave.
It really does. And an interesting development in China very recently, a Chinese court has ruled that companies they're not allowed to lay off employees just to replace them with systems based on AI. The decision here highlights this battle to balance really a stable labor market with obviously being able to embrace global technologies, especially, of course, in this case, AI. Alan Wong, who leads our China economy and government coverage, is here with us to talk us through so what did we learn and what did the court decide here?
Yeah, so the court in eastern China, in Hangzhou, actually ruled that this company that just deployed AI cannot legally just remove this worker just because his capability has been replaced by machines. And ironically, this person's job was to audit the results of large language models. And the company used some new AI system to replace him and demoted him and docked his pay by 40%. So he took it to court, and then the court ruled in favor of him, saying that a company under this circumstance cannot legally lay off this person because the legal provision is that if there are external and uncontrolled circumstances, a company is allowed to terminate employees. But this ruling followed on an early ruling late last year that upgrading your systems using AI, replacing your workers using AI is not a legitimate reason just to lay off your workers.
And if I'm a worker, I'm sure certainly this court ruling is certainly welcome news, just given every day we see news of AI developments in China and really, the displacement of it all and what industries could be disrupted. Why do you think China is going that route to implement something like this?
There are lots of numbers that might keep China's officials overseeing the labor market up at night. There was a recent statistic showing that the 25 to 29-year-old cohort had the highest jobless rate in a few years since they revamped that metric. So that age group is exactly the people that will be looking for some sort of entry-level jobs, but those jobs are rapidly being replaced by AI. So they cannot get that sort of training going, and then if you're occupying those positions right now, you'll be worried for your job because AI, the bosses using the right AI tools could potentially replace them with it. For China, the calculations is that there's a lot more, the social aspect of AI replacing workers is a lot more consequential than how AI could boost productivity. And obviously, like all governments, AI will want to balance those interests. But because China's political system puts a lot of expectations on a government to perform, so it has a greater sense of responsibility to ensure that people get the jobs and also the economy can be put on a path of growth using AI. It's a tough act to balance.
It certainly is, as you say, given what we see in youth unemployment, the trends there. Alan, thank you so much for highlighting that story for us. Alan Wong, who leads our China economy and government coverage. You saw a little bit of a glimpse of that when we're talking about AI jobs and even our industry, Dave. Certainly job security is one thing we bring up all the time.
Yes.
Will AI anchors one day take over our jobs? It really kind of leads our trending segment here today on the China Show. And we're talking in particular when it comes to what Hunan Broadcasting Network did over the weekend. This happened at the Star Labor Day holiday in Greater China. Okay, on the right, I gotta tell you, are the real human anchors, right? That's Mei Dong, that's Song Yiping. They're introducing them. The new colleagues, the AI-generated Sheng Sheng and Shuang Shuang. These are AI-generated anchors that the network will be using for the 24-hour reporting and are part of efforts to improve efficiency and reduce costs. Dave, what do you think about this?
We were talking earlier, right, that we could...
Oh, they walk together.
I can't tell which one is
real. That's the scary part.
Well, I think one of the comments was actually interesting because I think the comment was on the female AI anchor looks awfully like most other anchors now, but I think that's a different comment.
You know what?
But you can battle your own. Right?
We have our perfect imperfections, David. Okay,
yeah.
So people. I hope people tune into the show because of that, because of our lovely banter, not because of how put together and how we can read something very precisely and accurately. Right?
Imperfection is the way to go.
Perfect imperfection.
Yes, there we go.
Yes. All right. We're going to leave it there. Yeah. We're not going anywhere.
No, we're not. At least for 5 minutes. Right, welcome back. Before we wrap up the show, just to tell you that we are set for a record high here in the Asia Pacific. We'll see you all tomorrow.